Hey, welcome back, everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Well, there it is, guys. The talking heads in the financial press can stop arguing about this, at least until Friday's U.S. employment report and employment rate report. It's the chart of the week. A key inflation metric is back to trending below the Fed's 2% target. The core personal consumption expenditures index, or PCE, showed July's prices, excluding volatile food and energy, rose 0.2% from the prior month, but in line with expectations. Yeah, that's why we exclude food and energy, because they're volatile, right? Well, with that metric confirmed, a very important thing has happened. The Fed's preferred inflation gauge is back to trending below 2%, the Fed's target and holy grail of the past 2 years. As the chart of the week illustrates, the past 3 months of data on an annualized basis puts the key metric at just 1.8%. Since the inflation crisis began, we've been here twice before, in August and December of last year. But with the labor market showing healthy cooling, there's a reason to believe that this time is different. In the near term, the results don't change much. The Fed chair, Jay Powell, has already signaled a rate cut is coming at the conclusion of the Fed's September meeting. Guys, I don't know what to tell you anymore. Are these numbers real, or are we watching a scripted plan of events before an election? All I can tell you is nothing is cheaper in Uncle Frank's camp here in Chicago, Illinois. Okay, so let's get ready for the week. Monday, September 2nd, markets will be closed for the Labor Day holiday. Tuesday, 9:45 a.m. Eastern Time, S&P Final U.S. Manufacturing PMI. Wednesday, 8:30 a.m., U.S. trade deficit, followed by job openings at 10 a.m. Thursday, September 5th, 8:15, ADP employment, followed by initial jobless claims at 8:30, and then S&P Final U.S. Services PMI at 9:45. And then Friday, September 6th, 8:30 a.m., the U.S. employment report and rate. So what should we be watching closely? That's easy for this week. Wednesday's job openings, Thursday's initial jobless claims, and Friday's U.S. employment report and rate. On deck for earnings next week, nothing, but some of you may be watching CHPT, ChargePoint, after the bell on Wednesday, and NEO and Fuel Cell before the bell on Thursday. Okay, looking ahead for big items to add to your events calendar, it's now confirmed. GameStop will drop 2Q results on September 10th after the bell. Maybe Ryan Cohen will finally tell us what he plans to do with that $4 billion he's sitting on. We know from a recent report, GameStop is on the hunt for top product and graphic designers. Beetlejuice drops September 4th. September 12th, the Usher concert drops only at AMC. Transformers will see September 20th. We are only 18 days to the second day of the September 17th and 18th Fed meeting, where we currently expect to get our first rate cut. All that remains to argue about, will it be a quarter or a half? But that same week, Friday, September 20th, is the third quadruple witching date of the year. Friday, December 20th will be the last one. September 30th marks the end of the third quarter, a vital date for AMC fans. While it hasn't been announced, I currently forecast AMC third quarter 2024 earnings to be released around November 13th, and I also believe it'll be better than last year's Q3, which was the best in our 100-plus year history. Yes, that includes pre-pandemic, not investment advice or advisor. On August 8th, Judge Torres announced the fine against Ripple, so the SEC has 60 days from that publishing date to appeal. We can estimate that deadline to be around October 7th. October 22nd to 24th is the BRICS Summit. We could get huge headlines out of there. We are only 66 days to the November 5th election, which will be immediately followed by the November 6th and 7th Fed meeting. December 17th and 18th will be the last FOMC meeting of the year. We are 142 days from inaugurating a new president, January 20th, which means if Trump is elected, Gary Gensler is scheduled to be fired the following day. On Friday, the S&P 500 added 1.01% to finish at 5648.40. The Dow added 0.55%, currently 41,563. NASDAQ added 1.13%, 17,713.62. And the Russell added 0.67% for the day. Crude oil under 75 at 73.65, losing 2.98% on Friday, and gold stands at 25.36, losing just under 1% on Friday. But that's not why I brought you here. This is Yahoo's most shorted stock screener. I've got the region set for the U.S. Price intraday greater than $1. Average volume over 3 months greater than 200,000. Exchanges set for the New York. I see 1,633 results. ChargePoint is in 6th. Cinemark is in the 14th spot. Archer, the 21st most shorted stock on the New York. And AMC has dropped to the 57th spot on the list. I always like to check in on what people are talking about on Reddit after a big week. This is the sentiment and mention tracker. At the time of this recording, over the past 24 hours, NVIDIA, of course, came in first, GME second, Bitcoin in fourth, XRP in 13th, and AMC is down to 29th on the number of mentions. I'm going to start our analysis with where the action is, and that's GameStop. This is the hourly, so you can see the price action for the week, and I leave in the after-hours sessions because that's where so much action takes place in highly manipulated stocks. On this chart, you can see that beautiful move from a low of 1977 to a high of 2390. On Friday, GME closed at 2342, up $1.91 or 8.88% for the day, and added another 7 cents after hours. For those of you keeping score, GameStop has a 52-week low of $9.95, a 52-week high of $64.83. We are currently below the 50-day SMA at 25.43, but above the 200-day moving average of 18.31. For the week, GME tacked on 5.45%. The shills out there love to antagonize GameStop shareholders by constantly saying all the shorts have covered, but that's not the whole story. Yes, Chart Exchange shows a short interest of only 8.88%, 9.27% over at Fintel.io, and you can see a big drop by the close of May. That's the yellow arrow. But that was after a huge spike from the end of April to mid-May. That's the white arrow. Now, the short position change does reflect significant short covering. That's the red arrow. And the short covering appears to continue for the 5 half-month periods that follow. That's how short interest is reported. But before the shills start celebrating, I would like to remind them of one inconvenient truth. The bad actors on Wall Street cheat and lie, and the regulators let them get away with it to a degree that boggles the mind. Let's not forget, our enemies have a habit of mismarking their orders, don't they? Goldman Sachs fined for marking 60 million short sales as long. Goldman Sachs Group was fined $3 million by the Financial Industry Regulatory Authority, or FINRA, for mistakenly marking tens of millions of stock orders as long instead of short, according to the industry-backed regulator. FINRA says that 12,000 orders had price affected due to lapse. And then from the SEC charges Citadel Securities for violating order marking requirements of short sale regulations. To settle the SEC's charges, Miami-based Citadel agreed to pay a $7 million penalty. According to the SEC's order, for a 5-year period, it is estimated that Citadel Securities incorrectly marked millions of orders, inaccurately denoting that certain short sales were long sales and vice versa. So guys, for about $20, you can mismark orders at will and manipulate short interest reporting all you like. I'll remind you, both of these articles were from 2023. By now, you've heard the biggest recent headline on GME. GameStop has ended a $250 million credit facility. The stock is on pace for its biggest gain since June. I think we can all agree the catalyst we are all waiting for is Ryan's plans for the company going forward. This news could create a significant spike in the stock, and if history repeats, may cause a spike in AMC as well if Amy follows Jimmy up again. Subscribers to this channel know Uncle Frank would consider this event to be a white swan. If you enjoy coverage like this, please hit the like button and share this video on your social media platforms. This takes hours of work. I don't have a Discord. I don't do lives, get super chats, or sell t-shirts and coffee mugs. This is a free channel, so I need your support to keep it going. Well, the daily chart says it all on AMC. I said months ago Amy was dead money without a black or white swan event, and sadly, I was right. Adam, his senior management team, and this board gave Wall Street exactly what they needed when they were in trouble. APE, its conversion, and a reverse split we never needed to perform. I'm not saying Adam and company were working with Wall Street. I'm saying they are Wall Street, and you need only to review their bios to see that I'm correct. These people are not from the movie business or the theater business. They are distressed credit, private equity, and hedge fund guys, top to bottom, left to right. The conversion gave Adam the power to hang dilution announcements over the stock's head continually, and that's exactly what he did. I believe the stock would immediately spike higher if he would only announce he's done diluting for the balance of the year unless there's an emergency, but so far he's refused to do so. Meanwhile, Cinemark, a company that has more debt per screen than AMC, has vaulted to over $28 per share in recent days, up over 68% for the year, while AMC is down over 61% over the same time window. Adam supporters are quick to point out that Cinemark is up because Wall Street owns it and retail owns AMC. If that's true, can you explain why Cinemark is in the top 20 of the most shorted stocks on the New York? Can you explain why Adam is paid 3 times what the CEO of Cinemark is paid? Did you know Cinemark has never split its stock, has never invested in a bankrupt gold mine to bail out short sellers of its own stock, never invested $250 million in new projectors while $5 billion in debt, or millions on a commercial that plays only in theaters? AMC closed at $482 on Friday, flat. And while I do expect a rally in the stock soon, I also expect Adam to dilute again until I see different. And I'm sure the Limit Up, Limit Down committee will not forget to halt the stock to halt any runaway rally. Adam converted the company into a zombie company as predicted, and I still maintain it will only be a white or black swan event to deliver shareholders from the pre-split 48-cent price we now see on the stock. No one likes to talk about it, but all 5 of our top 5 executives are paid in the top 3 when ranked by their titles in their industry. AMC pays its executives like there never was a pandemic, like some of our theaters were never shut down, like there never was a shortage of films to release from Hollywood, like there never was a writers or actors strike, like we were never over $5 billion in debt and got no assistance from the government. The pandemic was the best thing that ever happened to Adam Aron and his management team, financially speaking. During the year of the pandemic, Adam saw his comp plan more than double. Over the past 6 years, Adam, his entire management team, and the entire board of directors haven't purchased a single share of AMC, but managed to sell over $1 billion worth on the open market. This is nothing more than an enrichment scheme from the beginning, and in my opinion, a deliberate and premeditated breach of fiduciary duty. Subscribers to this channel know that our board of directors is run by a Morgan Stanley employee named Philip Lader. So when I say AMC is run by Wall Street, I'm not exaggerating. But take our CFO, Sean Goodman, for example, who also comes from Morgan Stanley. He joined AMC in February of 2020. Since then, he has been awarded and sold nearly $17.5 million worth of AMC stock. This averages out to be approximately $324,000 per month. Mr. Goodman's total comp plan for 2023 exceeds $6.7 million, or roughly $563,000 per month. I shouldn't have to mention that AMC's stock price is down over 90% over the past 5 years. Now, as a shareholder, you may wonder, why would our CFO ever greenlight an investment in a formerly bankrupt gold mine like Hycroft, especially to bail out investors who were all short our company's stock or long puts against it. Companies like Mudrick Capital, for example. No one at AMC has any experience in running gold or silver mines to my knowledge. Our company was over $5 billion in debt at the time. How could any executive in senior management go along with such a peculiar investment so far out of the scope of AMC's business acumen? Well, maybe it's because Mr. Goodman was offered a board seat at Hycroft Mining and is now the second highest paid board member at that firm, bringing him an additional $168,000 during the 2022 fiscal year. When Mark Cohodes said Adam Aron, the AMC executives, and the board of directors ran an enrichment scheme at the expense of individual investors who actually saved the company, now you know what he was talking about. On your screen are the largest companies in the state of Kansas. Some are very familiar names. H&R Block, for example, has a market cap of $8.84 billion. Its CEO, Jeffrey Jones, earns just over $11 million per year. AMC's market cap is currently $1.74 billion, but Adam's 2023 comp plan exceeds $25 million, more than any CEO of any publicly traded company in Kansas. Now, I do have some good news for what I think will be a blowout third quarter for AMC. Both Batman and Beetlejuice collectibles will count for Q3, and they look like they'll be some very popular items. Some people have made fun of me for bringing this up, but I will reply to that by pointing out only a few years ago, this revenue stream was non-existent and now exceeds $50 million. So suck it. On a side note, I think Cinemark may be wearing out its welcome with the predatory short hedge fund scumbags. Both Barrington Research and B. Riley downgraded the stock just this past week. Here's the daily chart on Archer Aviation, one of Uncle Frank's favorites. It had a brutal week, but remember, I started buying this one in the low threes. Sold half my leaps on that run to over 540, and I've been actively buying the dips under 4 ever since. The stock is my number one pick right now. I believe a solid candidate for a short squeeze itself. Not investment advice or advisor. My best fill for the week, 3.386. 52-week low on this stock is 3 flat. 52-week high, 749. We are currently under the 50-day moving average of 405 and the 200-day moving average of 431. We lost 11% this past week and down over 51% for the year. I think this stock represents an amazing opportunity because it's a small company, billion-dollar market cap with a $6 billion order book. While this company has FAA certification for its main product, the stock is pre-revenue and pre-commercial and has become really popular with the short sellers. You can see Chart Exchange has short interest at 19.37%, and you could see the trend. That's that white arrow. But Fintel.io tells a different story. They've got short interest at 65.44 million shares. Short interest ratio elevated to 7.53 days to cover. Short interest as a percentage of float, here it's nearly 30% at 29.45 according to the New York and Capital IQ. Off exchange short volume ratio is a staggering 71.31%. That means there's some serious dark pool abuse occurring, in my opinion. Here are just some of the reasons I think shorts are making a grave and dangerous miscalculation here. This is not AMC in any manner. There is no Adam Aron here to assist. On July 14th of 2023, short interest was 14.64 million shares, or 11.46% of float. Fast forward to August 15th of this year, short interest has spiked to 65.44 million shares, or 29.42% of float. Days to cover has more than tripled over that time period from 211 to 7.49. While the shorts have been successful recently, pounding the stock back under 350 with the help of some institutional seed capital investor selling, in my opinion, they haven't been able to stop large institutions from booking chunks of the stock for the future. I've got 351 total institutional owners. Of those, 339 are long only, 2 are short only, and 10 are long short funds. Institutional shares stand at 154.95 million, or 48.51%. Nearly 50% of the float is held by institutional investors at the time of this recording. I thought you might be interested to learn who are the top 5 institutional investors in Archer Aviation according to Fintel.io and the 13s. They are Cathie Wood's firm, ARK Investment Management, BlackRock, ARK Innovation ETF, State Street Corp, and then Vanguard Group. Guys, Archer is performing so strongly as a pre-revenue company, even Seeking Alpha, home to so many hit pieces, is sounding the alarm for predatory short hedge funds with 2 articles over the past 2 days. Archer Aviation, swelling order backlog in a big addressable market. Archer's stock is a strong buy at 380 due to its significant progress towards FAA certification and a $6 billion order book. The eVTOL industry is poised for multi-decade growth, with Archer well positioned as an early mover to capitalize on this potential. Strong partnerships with Stellantis, United Airlines, Southwest Airlines bolster Archer's financial stability and operational plans. Despite risks like equity dilution and competition, Archer's strategic advancements and industry tailwinds make it a compelling investment for aggressive investors. Not investment advice or advisor. Guys, if you subscribe to this channel, you already know these things are coming. Archer Aviation on track to complete Covington plant this year. Archer Aviation opens first of 2 new facilities. Archer's eVTOL aircraft factory takes shape in Georgia. The startup aims to produce 650 of the 4-passenger Midnight vehicles each year. Archer makes plans for air taxi bases in New York, Los Angeles, Miami, and San Francisco. I think it's pretty clear that within about 36 months, you're going to be seeing these things flying around in every major city. There's nothing the short sellers can do to stop it. Guys, this article is only 10 days old. Future Flight Global has agreed to purchase 116 Midnight eVTOL aircraft from Archer in a deal worth up to $580 million. Together, Archer and FFG plan to launch air taxi services in some of the largest markets globally, including Southeast Asia, Europe, and the Middle East. Guys, all I'm saying is Archer Aviation would be the last stock on the New York Stock Exchange that I would want to short. From Daily Coin yesterday, XRP lawyers casts doubt on SEC's appeal in Ripple Showdown. As I said on an earlier slide, I'm expecting to learn if the SEC will file an appeal by around October 7th, approximately 60 days after the Judge Torres decision. But there's nothing stopping the SEC from filing before then, except good common sense, which they have none of. If they appeal, the price could drop and I will buy that dip. If we discover they will not file an appeal, the coin should rise in price and I will buy it quickly ahead of a mass adoption phase by banks and central banks all over the world. Potential ETFs that I believe will be bigger than Bitcoin's and Ethereum's, and even a chance the coin may play a role in Twitter's new pay system alongside XLM and even Dogecoin. This is not investment advice. I'm not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency, but I am a buyer of XRP. And how about we wrap this one with a Swan Watch headline from Bloomberg this Saturday afternoon. Landlords face a $1.5 trillion commercial real estate maturity wall, but debt markets don't see CRE stress as systemic for banks. Bank bonds are outperforming the broader market. Okay. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.